Okay, good evening, everyone. Tim Davis coming to you guys with another market review. And today is Friday, November the 3rd, 2023. I'm going to start this review out by taking a look at the market sentiment tool, which is the SPXA 200R, which I like to check from time to time to see what the overall view of the market is. So this tool tracks the percentage of stocks trading above the 200-day moving average. And I'll be using a chart today that has my 200-day moving average, which is this red line, my 50-day moving average, which is the purple, and my 20-day moving average, which is the blue. So we can see what price action is as it relates to the moving averages, as well as RSI, which is at the bottom of my screen. So want to point this out. So we did get that bounce this past week after the Fed minutes, after the Fed spoke and some more data came out on this past Friday. So we did get a little bounce. But overall, we have been in this downtrend type of slope until we got this recent bounce. So now the key is for the bulls is how far does it go? Overall, we are still in a bear market. Look at a longer term monthly chart. As you can see, this tool has been, we show downward pressure in these percentages since July. It's like it's trying to find a pivot, but let's see if that's something that's going to be sustainable or not. Let's switch back to our here and now. Okay, here's our daily chart. And this tool, we take a look at where the percentages stop. And we hit that 50 per moving average, and looks like we are stalling out there. Look at the wins percentage, it's starting to hinge lower. Full stochastic is still in an upward trend, but that's probably going to turn soon. And RSI is right at the oversold territory. So where could we head now? After such a strong week, several greens in a row, I do expect we'll start to see some red candles starting to pop in here. And then we have to see what happens. Do we stop at this 20 per moving average and use it as a level of resistance? We got to wait and see. Or do we blow through that? If we blow through that, then we can take out this low here that we've seen in the early part of October, or the middle part of October. So that's something to pay close attention to. The overall sentiment tool is still had a strong move, but we're right at a pivot point, at a strong pivot point. So we got to see what happens at this pivot point. How far do we pivot from this point? All right, let's look at the sentiment tool. Now let's take a look at the major indexes. We'll start off with the VIX first. Here's our VIX. And our VIX has a stretch of red. 1, 2, 3, 4, 5 red days in a row so far. So now, how far will the VIX go? We have to wait and see. However, I'll point out that we are in oversold territory. If looking at RSI, RSI is already in oversold. Full stochastic is in oversold territory. Wins percentage also in oversold territory. And we do have resistance right below, right just around it, just below 14. So we're going to see what happens on Monday. Do we get a bounce here and start to trend back up? Or do we head back towards this level of resistance back below 14? We have to wait and see. If I was a guesstimate, I would say we probably see some type of bounce here since we had such a so many red days in a row. Then we got to see what happens after that. But that's where the VIX shows. That's what it stands. That's where it stands right now. That's what it shows us right now, is that we are at a point where we could see some kind of a bounce in the VIX. That's our VIX. Let's go straight to our S&P 500. What do you know? Right at a level of resistance. Not only is it touching or hitting that 50 per moving average, it's showing possible level of resistance or possible reversal point. But if you look at where price action traded before, when we had a reversal right around here, back in beginning part of October, when we had this reversal point, we're right back at that reversal point, folks. Right back at this reversal point. pretty much right there. So we are at a level of resistance. There could be a pivot point. We could pivot lower from this point. Then if we do, we got to wait and see. Do we just travel down to the moving averages, which is this 200-day moving average will act as a strong level of our support. Do we hit to that level and bounce again? We have to wait and see. But I think we're at a pivot point, and if we do pivot from here, we have to wait and see how the moving averages react, and if price action is able to stay above moving averages, or do we drop back below them like we did back here? So that is where the S&P stands at, S&P 500. Look at the S&P ETF. For those who just want to look at the ETF, it looks the same, right at that 50 per moving average, and looking for a possible reversal, because we are at a point where we could see a reversal because of previous price action in the past and previous resistance levels in the past. Just going to extend this line over for this SPY. And you can see we are right there, just below 440 on the SPY. So right where we at now, kind of gapped up here. So we should see some type of reversal as we go into next week. That's the SPXA and the SPY. Let's go take a look at the diamonds, or the Dow Jones Industrial Average first. It's the Dow Jones itself. Wait 1 second, folks. I want to get the actual index itself. Here we go. All right, here's our Dow Jones. Again, same type of scenario. If you look at the awareness percentage, it is in overbought territory. Full stochastics is hitting overbought territory. RSI is also hitting overbought territory, with price action right back at a level of resistance. So again, after such a strong week, I do expect for us to see some type of pullback. How far we pull back, we have to wait and see what the beginning of the week does. We're right at a level where we should see some type of pullback, especially after these gaps up. 9 times out of 10, folks, when we get these gap moves, normally gaps fill. So does it feel right away next week? Gotta wait and see. But I think we are in store for a pivot point in all the major moving averages. That's the Dow Jones. Let's look at the DIA. If you're using the DIA, I first said the first target on the downside, I think we could see price action at least pull back to the 20-year moving average, which would take price back to around about 334. So where we at now, we could see price action pull back to at least 334. That'll take us back to the 20-year moving average. You have to wait and see what happens there. All right, now let's take a look at the triple Qs, which represents the NASDAQ. Here is our picture of NASDAQ, just above that 50-day moving average, right at a level of resistance where we pivoted from before. Right close to that level right there. So very close to that 370 level. So we could definitely start to see a reversal right here after such a strong stretch of green on this past week. So call it a still green light. So many stretch of greens in a row normally reverts to a red pivot point, or red candle showing up at some point in the very, very near future. So they got to see what happens. If we do get a reversal starting on Monday, we got to see how far price action goes the opposite direction. Remember, this 20-per moving average is going to act as a strong level of resistance or support. So now we're above it, so it should act as a level of support. So we have to wait and see how that pans out. If we break through it and continue lower or throughout next week, then we could take out the end of October lows. So that's the triple Qs. Take a look at the Russell 2000. And it is right at that level. And it hit that 50 per moving average, and look like it's starting to get rejected immediately, with the wins percentage oscillators hinging lower. RSI is in overbought territory and for stochastic, not quite in overbought territory, but it should be there in the near future, or possibly won't even make it that far before we start to pivot lower. So price action is at a point that has hit a level of resistance, so we should see some type of pullback here in the near future, and we could at least pull back to its 20-period moving average. Take a look at the IWM, which is ETF that represents the Russell. And with price action hovering just below that 50-day moving average after hitting that resistance, we could definitely see IWM at least pull back to try to test this level of support right around 170. So pay close attention to that and see if we pull back to test 170 next week. That's the IWM. So folks, I think that's all our major indexes. Again, we looked at the IWM, we looked at the SPY, all hitting levels of resistance after the reversal points on this past week. So I think next week is probably going to be a different outlook from what we saw this week. So just be mindful of that and be careful. And if you're playing alongside, just be very, very careful that you don't stay too long, because we're definitely still in this bear market and just traveling through this bear market on the ups and the downsides, creating these lower lows along the way, lower highs along the way. Let's take a glance at one longer-term chart, this monthly chart of SPY. And it looks like the green is still trying to hold on. Still trying to hold on after we hit a level of support. So I'm still looking to see what happens throughout the rest of this year. Do we actually break this level of support on monthly chart around that 418 level? And we can see one that I really, really want you guys really pay close attention to is the Russell. The Russell is the one that's really, look at the longer term chart. It's one that's really getting close to breaking a key level of support. Just see me have here on this monthly chart. Right around that one, that 16, let's call it 1662. 1662. We got several bounces off of there over the past year and a half, more likely. So all these bounces we have here. And we had another one recently over the past month, 2 months, bouncing off this level. If we break below this 60, let's say 1660, 1653, 1655 level, folks, on the Russell, at that point, I would say all bets are off. I think we definitely will be starting to see some of the lows that we didn't see since 2020. So, all right, that's all I have for you guys this weekend. Hopefully, this is something that you guys can use. Again, a nice rally on this week. I do not expect that will continue next week. But if we do get followed through, then that's great for the bulls, and we'll see big movement to the upside. But I really feel strongly that after such a big strong green week, we're probably going to start to see some red short next week. All right, folks, enjoy the rest of your weekend, and I'll catch you guys on the next video.